I've got to say, you can't not be greedy in a trader. It's that being a trader inherently makes you greedy because you're trying to get as much as you can from the market. But as who was it? Oh, as Royal Trade said, you need to know where to draw the line. Greedy is fine. You've got to be greedy in life, but that I'd say being greedy and letting greed control you obviously are very different things. So if the market's not doing something, but you're trying to get it to work, that's being greedy. Whereas greed is just, okay, the trade's running, I'm going to let it go, trail stops, and I'm going to get as much money as I can from this trade, as you should. That's what every trader should do, is try and make as much as they can from their ideas. That's the whole point of it. But yeah, letting greed make the decisions for you is obviously a terrible idea. Can you buy a $20 to $50 prop account? Are you asking me to do it, or are you asking hypothetically, can someone do it? Because I'm not going to do it. It's a waste of time, I'll be honest with you. I've got other things to be doing than trading $20, $50 prop accounts. Anyway, sorry guys, I've just realized that Chris is here. I've run over by a minute or so. Guys, have a good one. Don't leave when I leave, because we've got Chris Pulver coming to take over. You'll be in great hands with him. Thank you all for watching. Stay safe. Don't get margin called, and we will speak tomorrow.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else, and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
Good morning, everybody. Happy Tuesday. Welcome back. Just taking a look at the CPI data this morning. All came out at 8:30 a.m. Eastern time. Just the summary here. Core CPI came in a little bit better than forecast, slightly higher than previous. Core CPI all remain the same as previous, same as forecast, 2.8%. That's core CPI. Year-over-year CPI, which is what I was watching, previous was 2.4. Forecast of 2.4 came in 2.3. Kind of same thing. I mean, what is tended to be the lagging inflation data has been shelter. That's been coming down. We obviously broke a floor on oil around $62. So with oil less than 62, shelter coming down, all the lagging data kind of catching up to current. Like the trend has been lower. We've been spot checking the Trueflation, which is third party, and inflation index on this is showing lower levels. So let's go max. Nope. 3-year. Nope. 6 month. So just since December, I mean, pretty big improvement. Inflation index is up around 3%, dropped quite a bit. We have seen, several prints now in a row to the downside. If you go to your Edge Finder, look at your CPI prints, we should continue to see some trends in the right direction. So here's your inflation data, looking at year over year. So histogram is, I mean, it was sticky since summer of 2023, but I'll just draw a straight line over. So a straight line over this way. Outside of that little elevation into November, December, we have been trending 1, 2, 3, 4. 4 prints lower. So that is a good thing. Is it still, close to that 2% inflation target? No. The bond market is not pricing in lower inflation. If it was, we wouldn't see 10-year yields rallying, which they are higher today. We look at the 2-year yields, flat, but still on the last 3 days of trading, 2-year yields are up, 10-year yields are up. That's 1, 2, 3, 4 days with higher highs. 20-year yield. This will be something to watch here in the next couple of days, simply because this is where we had the Liberation Day kind of bond market breaking, or flinching rather. And so when we saw the basis trade blow up from, this went from 4.4 to over 5% in like what, 2 trading days? Yeah, so 1, I guess 3 trading days. 1, 2, 3. In 3 days, we saw a jump of 60 basis points or more. I wonder if we start to see something else happening here around that 5% level. I mean, it doesn't have to be, but this is the biggest pressure point for, the current administration and the Fed is how on earth are we going to service debt at higher yields? How are consumers going to feel anything as far as improvements go? Look, the Fed can cut rates in 2025, and you and I as consumers will never feel the benefit of that. That's kind of what last year felt like, right? Rates were lowered by 100 basis points and yields went up by 100 basis points. You want to buy a car? It's actually more expensive. You want to buy a house? It's actually more expensive because prices have gone up and yields and borrowing have gone up. So the cost to borrow is higher. I know this may not be like a major concern right now, like today, but I I have to imagine in the next 12 months, like this has to be a pain point in the market. This is going to choke out growth if you can't refinance debt, because the reality is, the world doesn't pay back debt, it refinances debt, right? You keep the cash flowing in, you keep the runway going, and I just wonder, the Fed might lower rates and be able to lower the service of their debt, but that's the Fed, not everybody else. Consumers have to borrow based on what the yields are giving us, and the yields are not going down. So anyway, markets are up today. We didn't really have, aggressive price action like we did yesterday. We just had a huge gap yesterday. Prices were actually quite quiet. This was yesterday's trading day, so we had a huge gap up, and then price action was relatively calm. We're getting more of a directional push today, but I'm watching. I've got some 5,900 levels. I just turned a little butterfly spread and some profit this morning. So hitting, if we hit 5,900, I hope that we actually have a little rejection off of 59. I want to see if my SPX trades can get back below 50 at 80 and come back into this range. This would be hopefully a nice little win on SPX today. So I'll ride that out a little bit longer. Yeah, we'll see. So I'm going to watch that closely. Let's go back. Actually, go back here to SPX. Let's go currency strength chart on the day. So we've got Aussie on top, New Zealand on top. We've got dollar CAD weakest, Swiss euro, pound, Japanese yen stuck in the middle. Not a ton of volatility in the currency market today, but Aussie, New Zealand coming out with some risk appetite. China wasn't up though. If I go HSI, I saw that China was down slightly. So China down slightly on the day. So HSI, this one, yeah. So here's just my China basket. So 23,108, China's down about 1.87%. CQQQ is a little bit lower. Alibaba is a little bit lower from yesterday's candle. Baidu is kind of back up again. All right, so we're at 91.25. I have some covered calls this week. Let me check on Baidu really quickly. Baidu is in here somewhere. Yep. So Baidu, yep, 95. I got to modify this one as well. So Baidu, covered calls expiring this week at 95, which means I'm probably going to see some profit on those just on the income side. I don't think I'm going to get them called away at 95. If I do get them called away at 95, that's okay. But I kind of want to ride this stock out a little bit longer. I think if we're going to see, US and China play nice, I think Alibaba and Baidu both have some good upside potential. This one, strong support. I would like to ride this one kind of uncovered. I mean, just because I think it can appreciate quickly. So if we go from, in the 90s into like 100 plus, I'd be interested if we get to like 108, 112, 115, then I start adding some covered calls. As opposed to if I start adding covered calls right now, it's nice if it just goes sideways and that's great. But if we start to get price appreciation, I'm going to cap my upside. So I think this is a stock that has potential to run. And, this is just like kind of phase one of my technical outlook on Baidu. If we have support, this is actually where I want to say I'm going to dump the shares. That's a big move, right? So, I mean, I own shares in the low 80s. I'd love to, double that entire chunk if we get to 150, 160. So good upside potential. It's going to take some time, but valuations, I mean, if they're real, valuations look pretty nice because they're cheap. right? Kind of the same thing here. Alibaba had a much bigger run. This took kind of the AI buzzword and ran with it, and we saw like a 60 to 70, I think 80% rip. That was up around 85% in like a month. So they can move quickly, say the least. Okay, but I'm watching both of those. JD, we had earnings on, or we have earnings this. I think it was this morning. Yep. So earnings this morning, beat on revenue, miss on EPS, but JD is up, and I've got this one covered at 40. I will also, I don't know if this is my covered call. I think it is. Covered at 40. Yep. So I've got a list here of covered calls that I need to monitor this week. So IBIT for Bitcoin, Snapchat, Pfizer, Silver, Baidu, JD, all those covered calls are expiring on the 16th. So I'm either going to be adding more covered calls to continue to generate the income or let some of those run uncovered and see if I can get the price appreciation. Okay, let's do some more top down. Well, your guess is as good as mine when this thing's going to stop going up. So, I mean, yesterday was a pretty big push to the upside, mostly led by a 3 a.m. announcement. That was the big, like, 1 minute candle. I don't even know if that was tradable in the moment. But that was pretty much what set the posture for the entire day. Here we are continuing just a little bit higher. Let's see. I mean, I still think you zoom in between the futures market. You can take this to, ES, go down to a smaller time frame. You don't see this happen very often in the futures market. And I don't think we can ignore that we have a gap right there that's likely going to be tested or filled, an inefficiency here. This area, the second box, let me make this a little bit thicker. So this box right here, I would say is a very realistic pullback zone simply because that was the previous low. So that first sell-off we had with the Mag 7 rotation when we first got to the 200 moving average and lower, that would have been the, like March pullback low. So we bottomed out here, February, March, pulled back for 2 weeks, and then flushed lower, Liberation Day, all the drama that unfolded there. So point is, this level where I've got the left structure over here, I can see the market finding that kind of symmetry. So it doesn't mean I want to get short. I'm just saying as a I want to buy a dip. I'm hoping we have a dip. A dip to me would be a pullback into that zone, right? So if I'm going to get short this market, it would probably be short-term trading. It might be, daily to weekly. It might be a futures trade. If you're waiting for a trend line break, even like this structure, until we break that trend line, I wouldn't be forcing shorts on this market, or maybe that connect to lows. So until we go sideways enough, or until we roll over, that would be kind of that short-term correction I'd be watching. Make sense? But what I see here, it just stands out. In the futures market, we don't get a lot of gaps, okay? But that's a noticeable gap. That's a big liquidity pocket. This is a noticeable gap. And we have lows right here. Obviously, big lows right there. Are we coming all the way back to April lows? Probably not. Probably not. But I think a dipper pullback into, I mean, I like 5,600 a lot. I like 5,600 to 5,300 area. Doesn't have to be perfect, but that to me would be a chance to buy the dip, define risk. If this is the chance for the buyers to step back in, this area I'd like to buy, and then see if we are going to make a run to all-time highs. So I would be happier buying the dip there as opposed to watching this thing melt up. And here we are having this conversation. Well, I guess we're at all-time highs with no pullback, right? Because you look at this and you're like, well, I guess if I didn't buy it here, what do I do? Buy the high, 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 buy the high. I mean, that's fine, but it's not how I trade. So I hope we have a bit of a pullback. Right? Futures market has some levels. There's big gaps in the SPX and SPY, obviously. Take a look at Nasdaq futures right here. Similar, right? So, kind of minimum gap, little liquidity pocket, that area, here's your left structure from March. So between about 19.6 and maybe 19,000 if we get a pullback. But tech is running pretty hot. In fact, this comeback, let's go bottom. I mean, we were down 28% in the Nasdaq, and this comeback is up around 29%. Obviously, we're not to all-time highs, right? So we had 28% peak to trough from high to low. So about a 26% correction. So 26% correction. Was that the, I guess that, yeah, okay. We go sexually higher. The highs in Nasdaq was December 2024. So that's where I get my 28%. So from this high to that low, there's your 27, 26.5% correction. Okay. And then we rallied up 29%. We're still not at all-time highs yet. But as far as the rally goes, this low to high, come on. Is my ruler broken? That rallies up 29%. We go back to S&P futures, and that low to high up about 22.5%. So Nasdaq tech a little bit more volatile to the downside, but also more reflexive and moving a little bit faster on the recovery. The Dow is weighed down again today by UNH. I can't believe the stock just can't find a freaking bottom. It's dropped another like 10% today. Down 15% from yesterday's close. That's insane. Outlook down nearly 14%, lowest close since February 2021. I mean, is there a reason why? On pace for the largest decrease since April 2025 when it fell 22. Okay, down 8 of the last 9 days. Look at this thing. Down, 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 down. Month to date, year to date, down 48% from its closing highs. Down, down, down. Yeah, we get it. I'm looking for a reason why. I don't see it. So anyway, I do have some exposure on this. I have a ratio spread. I did a longer dated ratio spread. I'm thinking that the market doesn't just drop straight down, but here's UNH. So obviously I'm down in the position. A 270 by 260. I was saying on these accounts, these are portfolio margin accounts. I was willing to own UNH. I'm not going to close this out. I mean, I could just say like, yeah, I'll just cut it off now. But let me go to January. I mean, on the downside, it's like I suppose in the lower deltas, this could still continue to drop. I think we're getting the type of volatility in the stock that it's probably never seen before. I mean, you go to a higher time frame, it's like it's highly unusual that this stock has behaved like this. I mean, this looks like a typical like progressive, insurance company, healthcare. Like there hasn't been that much volatility, but we did break the floor around 441. I don't know if this is just a monster pushback down into previous resistance, which is why I positioned my ratio spread there. So this previous resistance, does it offer a bit of a bounce? I mean, I would hope there's a bounce and a gap fill there. So that's kind of what I'm trading is, I mean, I've got the capital to own it. With the IV this high, the implied volatility this high, I mean, I could repair it. If they get me assigned early, that actually makes my job even easier because I can just come right in and lower the cost basis. So we'll see. So I did a 270 by 260, which is quite a bit out of the way still. So even at 323, if we have to get down to 260, this stock still needs to drop another 19%. Not saying that it can't happen, but that would be a drop of about 58% from the all-time highs. And even if I get the assignment, my assignment would still be lower. So I take off $10, and then the credit that I pulled in on the trade was, I think, a decent amount. I pulled in $6 and change. So as far as owning, I get assigned at 260. If that's the case, minus 10 in the ratio spread, minus 615 on the credit. I'd own shares of this at 243. So if I was assigned, I'd own shares at 243. That'd be about a 61% discount on what should be a fairly stable stock. But that's the problem right now is I think it's a little unstable. So anyway, that's that. Let's keep going. Let's do dollar index, which I saw was down a little bit today. The volatility index is down, one of the bigger crushes we've seen in a long time. So we're making some lower lows on volatility. I'd mentioned this, a good purchase anytime the VIX spikes is SVXY. This is up 27%. So I mean, you had to have the courage to buy this thing during April, which obviously wasn't easy. But this is up about 27%. So not a bad way to play contracting reverting VIX. So that I did buy the shares in here around $35. I closed them out about 38. I took a small profit there. Obviously, if I hung on a little bit longer, I didn't think we would just keep smashing lower. I mean, if you look at the VIX, when we settled into, this level here from like 60 down to 28, I was like, well, maybe this kind of runs out around 20 and then elevates again. But we've had no real flare up in volatility these last maybe 2-3 weeks, right? So long story short, SVXY was a good trade to play the VIX. If VIX is tough. I don't love this trade. I mean, I've traded VIX long. We've had some runs and had some good profit there, but on this example, it's more difficult to short it. You get paid like a fraction of what you want. So I tend to turn to SVXY when I like it. So until we get another VIX event, I'm out of it, but that's just something to watch. Bond volatility is increasing a little bit. There's your SVXY. Your dollar index is, I still think now that we've had our pullback into the 101 handle, watch this low, keep an eye on this. Like, I'm not ready to short the dollar yet. Two reasons. One is if we're on the right-hand side of the trend line, let's say that this thing is, here's the daily time frame. We're pulling back to the 2150 period moving average. Okay, big deal. We have some structure in here that could offer a little bit of resistance. We have some structure here that could offer a little bit of resistance. If I'm going to short the dollar, if you're taking a stab here, like, that's fine, but you also have to be prepared for it. You're not confirming that the trend is resuming, right? Like, this trend is not resuming yet. So if we have a little bit of choppy here, still pulling back, wait for a trend line break. I like that trade. Wait for some shenanigans, retest the highs, area 1, area 2, see if the dollar trend holds. I'm hearing, I'm seeing mixed reviews on whether or not the dollar is truly going to be a bear market or if this is nothing more than a bigger range. I think if it feels like 1 year that this conversation of the dollar's losing gold reserve status is really happening, this certainly seems to be the year. Gold has been one of the best performing assets. It's outperformed the freaking S&P. Maybe not anymore, but do you remember that slide we talked about not that long ago, maybe like 2 weeks ago? Like, the ETF GLD actually showed that over a 20-year performance, it outperformed SPY. That might have switched because we've had gold pause and the S&P has rallied a little bit further. But my point is, this is one of the worst starts in 30 years for the dollar index. And I don't know if the dollar is going to get any love. As far as like big picture, like, what happens when the dollar gets stronger? We usually see risk off trading. Well, if the world, like right now, the entire world is benefiting from a weaker dollar. It's better for trade, right? Everything that's priced in dollars is cheaper. It helps, import exports. It helps the global economy. That whole dollar milkshake theory, it's like it sucks all the liquidity up when the dollar is strong. So a weaker dollar is helping, right? So I wonder, like, is this the start of what could be a very important shift in dollar pricing? So, and I don't know, but I'd say, just as a trader, if you're following currencies, I think right now, even if this dollar index were to pull back into this area, if you want to treat this thing like, what, death of the dollar, this is truly the end of the dollar, it's not a bad way to play this. If we had a swing up here, let's say that that's my stop loss, and I positioned 1, 2, 3, small trades. Let's say like a whatever, 0.5% risk. Okay, I put a 1.5% risk on the trade for a potential, 3 to 5% gain. And on top of that, if we get the confirmation that we want, we can add more risk here of like 0.1%, 0.1%. We can build the risk up as it's going our way. We can turn this into a much bigger winner if we're right. So rather than being super, super, super precise on how this thing plays out right in here, just look at the bigger picture. So I think if we break this trend line, we possibly come back in and revisit the lows. That's probably a pretty safe trade. We go a little bit lower. I still think there's some potential divergence, but I think the dollar is going to struggle around this like 102 handle. We don't really go too much higher than that. That the pressure remains very firm on the dollar. But if we go, above 102, I wouldn't just force a bunch of shorts. So point is, confirmation, I think, is going to be key here. We're talking about trading a major, major macro theme. If you want to trade currencies, usually you can trade currencies with technicals and be pretty much like unstoppable. Just trade currencies, trade technicals, and fundamentally things just kind of fall in line. But when you see the combination of a fundamental landslide type movement on top of a technical setup, you get some of the biggest and most ridiculous moves in the market. And that's where it's like, man, this Forex market is irrational right now, i.e. Japanese yen in 2022, i.e. Swiss National Bank, 2015. Like stupid stuff has happened in the past. But we've never really seen the market break on the dollar before. We don't have flash crashes on dollars. We haven't, but I do wonder if we're about to see one. So, like I said, if this conversation, it's been around for probably over a decade, death of the dollar, world reserve status, blah, blah, blah. But this probably has the feel of it's more real now than it has been in a while. Obviously, it's going to be virtually impossible just to completely eradicate the dollar. But you can see that the world is trying to move aggressively away from the dollar. The world is trying to move away from dependency on the US right now. And we'll see how long that trend sticks. So anyway, we'll see. I think if we get back down to the lows again, 98 was the low. If you can zoom in here, you can see some resistance. I mean, a 4-hour time frame would also give some good indication. If we get back below this, if we get back below the 200 moving average, that might be an early entry, but entry there, stop loss above. If it breaks this trend line, I think you just hang on to that trade. Be willing to take this out to this trend line though. One thing in currencies, I never really love to put the stop loss right above the U-turn. I like to trade a little bit smaller and then maybe reserve a trade for the same high or a slightly higher high. So 1 and 2, if you want to just wait for the trend line to break, then you wait for the trend line to break. You sell it there, which is actually a crappy entry. And if it pulls back, you're looking for maybe this as a second trade or this resistance here. So, and all I'd be going after if I'm shorting the dollar, I'd go after the same low. And if we poke that low, move your stop loss to break even or better, start trapping profits into this. If we go lower, that's fine. Right? So I think it's something to keep an eye on. If you're a currency trader, dollar certainly moving a lot. And Aussie dollar, I still like the pullback zones. So I mean, like I said, this week it's like I'm not buying that dip. You see, like serious? Like that's not even a pullback to me. So I want to see if there's just a bit more pullback in here. There's good left structure over here. So I mean, if I'm buying Aussie dollar, I kind of like this, 63 to 6200 zone. I could put a swing trade below that. So watching this area and then look for a swing. If it goes higher and it just keeps running, I guess I don't get the pullback that I want. Like I don't like to chase currencies when they're so good at pulling back and finding efficiencies. Here is oil. I did get a little scared out of the oil trade that I was in for CL. Granted, I only lost $10 on it, which isn't a big deal, but this trade would have been pretty nice to just hold the profit. It was going to be worth like $150. So I got out, no big deal. But oil at the same low, and this is what I said. I said if we came back down to this level, I'd like to look at a bull put spread, or I'm sorry, a bull call spread. So if I bought a call, sold a call, try to look at some type of like 110, 120% return on risk, that trade will be playing out pretty nicely right now. I don't think oil is necessarily heading, into bullish territory. I think we're still going to be stuck between this, current low around 55 or $56, maybe resistance around the 65 handle. If we do come back up to the 200 moving average, this has been a rejection point for a while. So resistance, that was a fake out, resistance again. So we come back up to this, 65, 65, 50 resistance and hit the 200 moving average again, maybe, right? It just becomes more noise. So it's just it can be tough to trade unless you're really precise, or you're basically just taking both sides of the trade. If you're selling above, selling below, and it stays in the middle, you can make money on that trade. So just keep an eye on it. But this is resistance now, and this 200 moving average is resistance now. I would not think oil is going to go long until we can break firmly above this 200 moving average with some reason why. Otherwise, I think it's going to be maybe at best another range trade. All right, let's go gold and silver. So gold, I still like the pullback on gold. I'm still hoping we get a bigger pullback on gold. I'd like to see low 3,000s. So, 3,100, 3,000 on the number would be pretty nice. Consolidation is totally fine, right? If we consolidate here and it just goes sideways, 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 that's fine. Okay, is that enough to entice me to buy more gold? Kind of, but not really. And I just say that because this bar count to me is still the most obvious reason that I'm not long. I'm not adding more at these highs. I'm long on gold. I still have gold positions. I'm still long, but I'm not adding more yet. I really want to see this market try to play catch up with this, 100, 144, 200 moving average if possible. Okay, so I still like gold. If anyone is more short term, you've got some intermediate support in here. If that offers a trade back up, be precise, go down to a smaller time frame. You can kind of scalp that thing back up to highs again, but I wouldn't get crazy bullish. I think that if at best we buy some lows with some confirmation on a smaller time frame, and then see if this range is back up towards 3,400. If you're lucky, maybe it pops back up here towards the high at 35 when it spiked up. But you got to get down to those smaller time frames into the trenches. Silver, pretty sideways right now. I still like silver. I'm waiting to see if we can break this high, If we do break these highs, love silver. Like silver will be, to me, better than gold. Partly because it's cheaper, partly because XAU versus XAG is so lopsided right now. But also like this posture to me still looks very bullish. So if we can get a push and break these highs, I think this open space on silver looks awesome. If we come back down to 29, I still like the support there. I'll probably still add some trades to it. But between 29 and 26, I'm adding positions here as opposed to, getting, excited about a crazy big breakout to the upside. So if you look bigger picture, open space, go back to the weekly time frame. This is why I like silver. So if we can hold 29, hold 26, I'm looking for this thing to break $34, $35 and get a run. Silver could be a nice bullish trade. So I'm going to try to hang on to all of my silver until we get into the 40s, and then I'll start taking some profit. Bitcoin just over 103. We're nearing some all-time highs, which is exciting. There is some divergence on the daily time frame, so overbought conditions with some divergence, meaning price momentum disagrees. As I said, I think it'd be better for Bitcoin right now, just as far as the efficiency goes, to pull back and find this area. If we pull back and find that area at a minimum, okay, or we pull back to this area to find this as well, I think a bullish move to all-time highs would be better if we check this box and possibly check this box as a swing trade. If we don't, and we just run to all-time highs, I mean, this is exciting, okay, but it also might be a larger accumulation phase. So I still like adding to Bitcoin here if it pulls back. And I could be wrong. Look, we could leave this thing open. We can run to all-time highs. Okay. And then the next big wave is, eventually price pulls back to sub 100,000. If we get to 125, 130, 140, do expect pullbacks maybe in the 100K, So it's just going to continue to have its ebbs and flows. But I think from a purchase point, I mean, I wouldn't mind buying some more Bitcoin here, anything in this pocket as well. If it just keeps going higher, that's fine. But exposure-wise, I'm probably going to let my IBIT run uncovered. NVIDIA's back above 130. That's encouraging. We're getting some NVIDIA love, huh? Look at this bad boy making a comeback. Wow, you really stick it to NVIDIA when you cut the price target from 175 to from 180 to 175. You're showing them. Anyway, back to 130. NVIDIA overall position wise, I've got a collar trade on this one. I think out to June. Let me go NVIDIA here. So I had the shares. 130 is my cover call into July. So I'm still down. My break even on NVIDIA. Let me check the break even here. NVIDIA sold a bunch of premium. I did close out a lot of my, I've got some naked puts in here. So this is up a decent amount, pulled in 260, pulled in 348, up about 67% of that naked put. So not bad. These are like leaps. This is out to the end of the year. May not be a bad thing just to protect it, to be honest. I mean, it's a little early. I think if we keep running, but I mean, I don't know. This is an interesting surge. I think this is now going to make Mag 7 also get off its butt and move a little bit higher too. So this might not be a bad spot just to take profit. I mean, I sold puts like $70 puts. The odds of this getting assigned are slim. But for me to sit now for the next 220 days and hope for an extra $100 versus just taking the profit now and grabbing almost $800, I think I'm just going to take the profit. So if NVIDIA is going to make a run today, maybe I'll just close this out by later today. So I'm going to put this one potentially on the NVIDIA naked puts. So if I close it out, that'll be a nice little win. I've got my collar trades in here. So this is my 130 by 80. 130 by 80. 130 by 80. Okay. So that's how I've got my, I had the downside protected. I've got the covered call at 130. We're trading above it right now. I mean, I'm just going to see if it gets called away at 130. Again, it's out to July. What I might end up doing is possibly rolling this, but I need to double check where my break even is. So I'm looking for that right now. NVIDIA, willing to own. Those are all profitable. Earnings, that was a winner. Ratio spread, that was a winner. There we go. 119.68. 119.68 is my break even. If I were to, let me see if I can modify this real quick. So if I take a collar trade here and I roll this call, so this whole position is down. My collar's down. But if I roll this thing, let me see if I can roll. Can I roll this collar? I don't want to roll it out. I want to roll this. Let's take the expiration down a notch. Let's go to the end of June. So I'll roll this down by a few weeks and roll this to like a 1. I mean, I could get some credit if I roll it down. So the put side. So I could roll my put side up. Well, if it's going up, I might as well just keep this lower. I don't know. I'll mess around with it. The point is, I can take away some of the time here, roll my strikes down. I'm gonna cap my profits a little bit, So instead of making, $11.32 a share, I would lower it to 127, but I'd lower the time by about 20 days. So 127 minus 119.68 plus another 30 cents. So 762, and the number of shares I have is 500. So 762, I make 38.10, and I'd be out of the trade by the end of June. Not bad. Or I can do nothing and just let it get called away and make, $5,000. A little bit more than that. So if it was 1132, 500 shares, I make 5660. So if I get a little bit more active, I'm just trying to free up some of the capital. Also, not get stuck in Nvidia. I mean, I'm sure everyone is probably encouraging, like, hey, I think Nvidia is going to go back to retest all-time highs. I mean, that's totally fine. If this is going to make a run, I mean, now that we're back above the 200-day moving average, this thing is surging once again, which is kind of nice to see. I'd say at this level, it's pretty critical that we stay here or we go higher, right? If we all of a sudden have a rejection on Nvidia, I mean, and I could be wrong in this analysis, but this low, this low, this low, like once that floor broke, I mean, this trend line could offer some resistance. So I think if we're gonna continue to push higher in Nvidia, I don't mind, pushing to all-time highs. And my collar trade here, I'll just get it closer to expiration and then probably just roll my covered calls, try to generate more income, right? If the price target's at 175, well, heck, if we go to all-time highs, then absolutely I'll just roll my covered calls. I don't have to grab every bit of this. But if I can take 130, roll out another week, grab another, $100 to $200 a week on 500 shares, that adds up pretty nicely, right? So anyway, that's probably what I'm going to do. Yeah, I think that's better than trying to fool with the collar trade and get out earlier if this is going to be a bit of a runner. So what's this doing to mags? Yep. So led by NVIDIA, what's our mags doing? So Apple is sideways. Amazon is still up with some fresh highs today. Broadcom just crushing it. These chip stocks are really running hard. Google, definitely an improvement there on Google, which is nice. Meta, man. Everyone's hating on the Mag 7, but look at it come back. Mag 7 was down 30+%. Now it's up 32% on the recovery. Don't hate on Mag 7. You know they're going to be good stocks. Netflix back up. NVIDIA ripping it. Tesla 320. Just rolling some calls. Check Spotify. Yep, hanging in there. Okay, so Mag's doing pretty well. Bonds again, fresh lows on TLT. Sideways on IEF. Back to the same lows on SHI. Berkshire Hathaway off the all-time highs. Let's go currencies. We did dollar, oil, gold, silver, Bitcoin, did mags. Let's take a look at some currencies here. Aussie and New Zealand both doing pretty well today. Aussie CAD, this is why I've been long. I didn't get the pullback that I wanted. I was hoping I had a pullback in here on Aussie CAD to buy another chunk. It didn't fill, but yeah, I'm going to hold this thing up until maybe a sweep of these like 93.50 levels, 93.70 levels. Aussie Swiss looking a lot better. So trade's looking pretty good. Let's see if we get up here into this first chunk, find some resistance maybe at the 200 moving average. But if this is wave one, hopefully a slow pullback. So wave one, a little pullback. I'd love to see a wave three, and then I'm going to get the heck out of this trade for some profit. Aussie yen, right side of the trend line. Talked about the August 5th bottom. Aussie New Zealand also making that scream. I didn't get filled at my 106 like I wanted, so I'm just kind of riding this thing out. See if we get to 112, 113, 114. Aussie dollar, I'm not buying that dip. CAD Swiss looking a little bit better, but kind of the same as the other structure is like, do we get up here first? Do we find some resistance? Is this a bottoming pattern that I can trade? So I'll buy back in again, look for a symmetry trade, get me out at wave three. I want wave five. Like honestly, if it didn't matter to me, timing and money, it's like, yeah, wave five would be great. If I had the patience for a wave five, I think we could still get all the way back up here. But I think a wave three turns me into a pretty profitable position, and I'm going to take it and run with it. CAD yen, Yeah, I mean, if you bought the equal lows from August 5th, that's been a great trade. That's up about 400 pips. Swiss yen, leave it alone. Euro Aussie, never got the pullback. This thing just slid lower. Euro CAD, the sell trade that we talked about has been working out. If you'd sold this structure or equal highs, you're up a few hundred pips. I was targeting 5,400. So directionally, it's doing okay. Euro Swiss looking a little bit better. I'd love this low to hold. I'd love to see price get up into this same high. Do I want to take some profit here? I mean, maybe it's a 1, 2, 3, 4, 5. If that's enough. I might take some profit there. If it's enough, we'll see. Euro pound, just a complete reset. That's why I love trading euro pound on robots, because it just is a very neutral, efficient currency pair. Plus a slow mover. Euro yen's going a little bit higher. Euro New Zealand sliding lower. Never got the pullback that I wanted for that swing. Euro dollar. If you were short euro dollar, like we talked about, the 113.50 area, even reserving a sell trade at 115.50, you got the, I said 111.50 to 110.50, good targets. We could pull back a little bit deeper. Just don't be greedy. If you're short here on euro dollar, don't be greedy. It's okay. Pull back 30%, just shy of 38%. Move your stop losses, trap some profits, grab a few hundred pips. I mean, I still like this. If it were to come back into this area, I still like euro dollar long. I really do, but I wouldn't be forcing a short trade, because I think this is actually a bull trend in the making. So if we're going to see a weaker dollar, a bullish trend, I don't want to be stuck trying to short this thing when the reality is it's more just accumulating to buy the next swing. If this is a pullback to give us a wave three, you want to be participating in that wave three. There's a lot more profit to be made there. Pound Aussie, never got the 506 minute pullback that I wanted. Pound CAD, Euro CAD looks a little bit better. I would stay out of pound CAD unless we came up to reject off the same high, 87, 8800. Pound Swiss, this is going exactly where I wanted it to, which is this pocket, this pocket. If you're long pound Swiss, love that trade. Take some profit off. If you want to hold on to a little bit longer, we obviously can come back to the same resistance. But we talked about buying small and still be willing to buy the lows. So if you buy small, be willing to buy the lows. I just thought there was a high probability of getting like 1250 to 1350 and grabbing some profit there. So pound Swiss, if you're liking that trade, you still got another maybe 100 to 200 pips to go. If you want to trail that thing, we could get up into the 114.50 to 11500, but I would put a trailing stop loss in. Pound yen doing its thing, scalp city, I guess. But yeah, I mean, it didn't come down to the August 5th lows. Pound New Zealand, I'd say no trade. Pound dollar, again, probably against the grain. I'd like to see if this can pull back just a little bit more. If this structure breaks, then maybe a bigger picture move on the pound dollar. If the dollar's going to get weaker, I think euro dollar is a better trade. New Zealand CAD, I'm still long and holding this one towards highs at 86, highs at 87. I wanted a pullback. I'm still waiting for a pullback. If we get one, we may not get it. I'm just holding a long position. New Zealand Swiss, still riding this one out as well. Would love to see this trade highs, resistance at the 200. So maybe this is all wave one, pullback wave two, and then to get a profit for symmetry wave three, get me out of this trade. So I will take these buy stop levels, probably turn them into buy limits. Because if we come up into this resistance, I'll go buy limit, buy limit, buy limit, and then try to take a wave three swing. And I could hold this for a wave five and try to get super happy with the net profit. But even taking a add-on trades for wave three would still make me a lot of profit. I'd be happy with that. New Zealand yen, August 5th bottom has been pretty nice. New Zealand dollar, it still didn't pull back deep enough. If you're aggressive in this one, that would have been a good entry. That's a small entry. I'd still be waiting for deeper pullbacks with a stop below. You might still get it, but if this runs into open space, well, you can pretty much see that from 58.50 to 63.50, it's open space. So if dollar gets weaker, this thing runs hot. Dollar CAD, I don't know. I hate the dollar CAD right now. It was a great trade in here. We were long, looked to get short. We had a crazy flashy move there. That was when the dollar essentially, broke. So we had a nice swing trade setup where it was left tip, center tip, right tip. right around that 50618 zone, and it did follow through with that swing. So, I mean, overall, a couple good trades here. Right now, I'm just staying out of it. This is, to me, this is a noisy zone. Dollar Swiss looking a little bit better. I'd still like to see, especially if gold gets a little bit weaker, I'd like to see the dollar Swiss into this zone. So just watching. I mean, I hope this doesn't break down too aggressively. Oops. I'd like to see this continue to head back up into this cluster around 8,800. If we get on the right-hand side of the trend line, maybe a pullback and then a move up, try to get towards 9,092. I don't know if I want to hang on to it that long. I'd just be happy getting out of 88. My average position is around 8,500. So if I get to 88, I think I'm okay. Just take a profit. The other trades to me look better. My Aussie Swiss, CAD Swiss, Euro Swiss, New Zealand Swiss, those look better. And then lastly, dollar yen. Somebody asked me yesterday, would I still get long dollar yen? And I said no, because the best spot to get long on dollar yen would have been the courage to buy this thing at support with very little risk. Now you're up 500 pips, 600 pips from the 140 lows. I mean, you've got a almost 800 pip move. I would not be chasing this thing at this level. So if you missed support, this is not the spot that I want to buy the dollar yen 800 pips later. I mean, could this continue to go higher? Yeah, sure, maybe. But it's clearly run into some support to become resistance, right around that like 148, 148.50 handle. But if you miss the support trade, like, don't chase this thing. I mean, I don't know what this is going to do. Is this going to hit support to become resistance and push it back down? Maybe. Is this going to be a bullish trade to set up again and then swing back up to the same highs here? Maybe. That's the dollar yen, right? We still have this huge range all the way from 162 down to 140. This is just stay in that range. So I think there are better entries if you missed it. Wait for a better setup. So. All right. I think that'll do it for today. Chandler and team, we good? Any other? Is there another guest coming on? Otherwise, if I'll wrap it up there. Go just a few more. Any final requests? A couple more minutes. Did a little bit of everything. Markets for the day. We're still up with a little push this morning. 0.77% on S&P. 1.46 Nasdaq is ripping, mostly on the coattails of Mag 7. NVIDIA is doing really well today. Chip stock's doing really well today. Take a look at the heat map. Let's go FinViz right there. So the heat map today, NVIDIA, big winner, 6.13%. Semiconductors doing really, really well. Micron, I took a lot of profits on some of the premiums that I sold during April. Amazon's up, Meta's up. I mean, Mag 7 doing okay. Microsoft is flat. Google, nice to see a bit of a turnaround of Google. Meta's ripping pretty nicely. Tesla obviously above $300. So all in all, not bad. Healthcare just getting smacked. Johnson & Johnson, I actually put on a trade yesterday on Johnson & Johnson. Take a look at that. I was looking at a volatility play. So right now it's up on some puts. Let me go into an individual account here. So I'm up about 5% on this trade. This is a whoops. Pinch trade. So I've got a 140 naked put. This is my pinch trade right here. All right, I'll get that organized. So just keeping a eye on things. That pinch trade set, that can't be right. Oh, this is incorrect. Let me go on group. So it's the uh 150. So the 130 is my naked put. Yeah, so the expiration there all 66 days. That one is my pinch. There we go. There's my pinch trade. There's my pinch trade. All right, anyway, I'll keep this organized. But I was looking for a volatility play on Johnson & Johnson, and we're kind of getting it. So being dragged lower by United Health Group. And if this goes down into some 144, some 140 levels. That's a pretty good asymmetry trade. I was risking about $3.98 to make $10. So over 2-to-1, which I'm pretty happy with. If I turn it into 75% profit, 100% profit, return on risk, I'd be good with that trade. So we get back down to these lows at 142. That should pay somewhere between $5, $6, $7 out of the 398 risk. So put a chart alarm down here at these lows. Keep an eye on that one. But healthcare would be your lagging sector today. Real estate also red, but healthcare getting beat up bad. UNH down 16+%. Everything else a little bit more manageable, but still not great. Okay, I'll let you go for today. Have a good rest of the day, and we'll see you next time. Thanks, everybody.